Thank you. It's a pleasure to be here. I'm going to have a presentation which is going to be a bit shorter because my World Bank colleague went much longer than I expected, but it's okay because we are,
with everything I said.
because there is actually some overlap. So I'll try to go much faster because Rohit did some of the work I was going to discuss about. So let me just set the scenes. Rohit mentioned we had a World Economic Outlook and the IMF World Bank meetings in Washington. One of the themes which really people are talking about is that in this world of quantitative easing, or at least very low interest rates, you've had financial assets go up. On the left side, you'll see global different classes of financial assets. Financial assets have been growing up this whole year. Year-to-date returns are very high. But what we see globally is that there's been many economic disappointments. So these from the economic surprise index. It means that economic developments has been disappointing compared to what we expected. But at the same time, financial markets have been going up. So the kind of buzzwords right now on this discussion is that there's a lot of financial risk-taking, but not much economic risk-taking. That's the buzz. What does it really mean? The problem is that, yes, the financial system is doing very well. There are some positive signs on manufacturing growth globally on the left side, especially that manufacturing in the US is picking up. But the key issue globally in most advanced economies, and even in many of the emerging market economies, is that fixed investment is very low. Look at the right-hand side. So this is the real issue, right? Nobody's investing. Nobody's a generalization, but that's the key issue. That's why everybody's talking about this mediocre growth, secular stagnation, all the things Rohit mentioned about the global economic buzzwords. But this is what really we are talking about. Investments very low, and there isn't much signs of a pickup, except in the last quarter in the US. So there is some hope. Let me go quickly. These are our projections for the World Economic Outlook for the next few years. Growth disappointment. So growth is a bit low, but the pace is very uneven. So growth is expected to increase, not as fast as we expected, but it's very uneven. That's the broad strokes, right? You all know, I'm going to go through this very quickly, okay? You all know Philippines' growth in the last few years has been very impressive, right? Especially compared to its neighbors. It's growing faster than it used to, while it used to be the other way around. The drivers of growth are greater and more positive. As you know, Secretary Balisakan mentioned this already. It's more investment-led, while it was always consumption-led in the past. If you look at investment, there is greater investment in plant and machinery, although public construction and private construction still do matter quite a bit. But this is a challenge, right? If you look at the growth in the Philippines in the last decade, the share of tradable sector has fallen. Now, you would generally panic saying, oh, that's really bad. It is not great, but it's not as worrisome as it looks. Even though the trade share has fallen so much, there are some positives you can look at. Like there is more diversification in the trade structure, which is very positive. And I'm going to argue later on that we should not only look at trade and growth from a trade to GDP kind of sense. We should look at more service sophistication or export sophistication, the kind of value added, or diversification. So that's going to be kind of a bit of my theme. This is where Philippines stands in the next few years. Our forecast for Philippines is about 6.2, 6.3 in the next year or two. I know you all think it's a bit on the low side, but that's just our baseline. What we say is that that's our baseline on current trends. It could be higher if certain policies can be implemented. The reason we have 6.2, 6.3, I'll just try to go through some of the details. But before that, to show you that even though I said Philippines is doing very well now, the challenge is enormous, right? I'm not going to go into too much detail here because, again, Rohir from the World Bank and Secretary Balisakan has already talked about it. But as we know, the challenge on poverty and unemployment and underemployment is huge, right? So we have a long way to go. But let's get to the key question. Can the Philippines growth take off, be sustained, what kind of trajectory can we think of? So again, I won't go into details. You know this, but the key issue is as a demographic dividend and the other endowments, but particularly the same issue and or policy endowment which was mentioned by Rohir, which was the large English-speaking labor force. It's very relevant, especially for the fact that it could be important for the service sector going forward. I'm going to make a big point about the service sector, which ties in to the World Bank's point and Danny Roderick's point, which is some work we've done on. But I also want to say that there are some other endowments we need to focus a lot on, which is agribusiness, mining, and tourism, which again was mentioned by Secretary Balisakan, so I won't go into it in detail. The good news is that the fundamentals for the growth takeoff are in place, right? This was already mentioned, but we have a current account while we used to have a deficit in the past, so we don't have any balance of payments issues. Inflation is under control, and critically, our debt to GDP, especially public debt to GDP, has come down, so we have the fiscal space to do more things. Since it's the Philippines Economic Society, I'm going to kind of take a fairly standard approach, what you all are familiar with, so that you all also can think about this in a more kind of academic way. So when we think about growth, we always think about technology or productivity, capital, and labor. So I'm going to go through those ideas very quickly, especially linking up to kind of say how do we think, how this implies what we think the growth rate or the growth outlook could be, and what kind of policies are needed to accelerate the growth outlook from that trajectory. So I'm going to be a bit slightly academic here now, because where do we get our growth forecast from? A lot of people do, how do we figure out the trend growth? A lot of people look at just the trend, right? HP filter, I mean, maybe you all are familiar, it's kind of a trend. But important point has been raised recently. Because of the financial market exuberance, you can't just look at a trend, because the recent trend is going up a lot because of cyclical reasons of financial factors like the financial accelerator. So most people say now if you're looking at a trend to look at potential growth, you should control for the fact that you are in a cyclical boom and there's a credit boom. So the good news is that even if you control the trend for the fact that we are in a bit of a financial exuberance or we are in a financially positive cycle, potential growth in the Philippines is still rising, while most of the region, probably except Indonesia, the potential growth has been falling, right? So we do think potential growth has risen in the Philippines to 6.25. That's trend growth analysis you'll do probably in your textbooks immediately. The more classic textbooks analysis we all do in economics is look at the production function approach. What are the trends in productivity, capital, labor, human capital? Then you say, okay, what are the trends in those? What could be sustainable? We do that analysis, we get a potential growth in the Philippines around 6.25, right? This is 2013. That's again, just simple breakdown, production function approach, as all economists appreciate, and current trends. These are current trends, right? But the point here is that it's not easy to get to 7+ if you just do the historical decomposition. So even if you extrapolate this with a demographic dividend, you're not going to get growth rates of 7+ unless you have a big switch up in the investment rate from 20 to 25%, or if you have a big jump in productivity, or if even though you have a demographic dividend, what goes into the production function is employment, right? So you need to increase your labor participation, or you need to increase your employment. But if you have a demographic dividend, but everybody goes abroad, you don't get higher growth, right? Another way which traditionally we always look at growth to estimate potential growth is the relationship between growth, employment, capacity utilization, unemployment, the Phillips curve kind of. This used to be called the blank chart core technique of finding potential growth. If you all remember this, it's kind of a Kalman filter. Now there's a more sophisticated, we call it multivariate filter. It's a relationship between unemployment, inflation, GDPs, capacity utilization, inflation expectations. Even if we do that analysis, again, we get Philippines growth potential around 6.25, 6.5. So the bottom line is that historical decompositions give you roughly our growth forecast we have for the short to medium term. Of course, cyclical factors can vary through the next few years. Now I'm going to get to you what kind of policies could help us move to a higher growth plane. Most people talk, so I'm going to focus on productivity the first, right? I showed you production function. First, productivity. Important point people forget about. Yeah, Rohir mentioned Danny Roderick making the point about services. That services are potentially a game changer, but we all think historically it has been difficult. So based on Roderick's work at the fund a few years ago, what we did is, Roderick's point was always about manufacturing, moving up the value chain in manufacturing, what they call sophistication in manufacturing, would mean get a greater productivity growth because it uses more it's more capabilities or skills levels, and so people earn higher wages as well. You could do the same for services. So we did that for services, and you can see Philippines has a very fast growth in modern services, which is really BPO plus, which means that its service sophistication index, based on the way the sophistication concept used by Danny Roderick, has been rising, and it's pretty good. So, this is a big important element of moving people from not doing much to going to a call center is moving to high productivity, right? This was again kind of mentioned by Rohir and also the Danny Roderick point. This is the whole world. What's happening in world trade? If you look at world trade today, this is the whole world, right? Manufacturing growth is not going to be easy to maintain at fast rates as it used to be in the past. And that's already happening, right? It's this idea that exports in manufacturing is going to be hard to sustain at high levels is already happening. And if you look at even for middle income countries, the share of manufacturing is falling. So it's not going to be easy to be manufacturing hubs alone. So I think we really do have to think about services as well. So this is a kind of the point of Roderick as well. So what we did is we want to look at the drivers of productivity growth globally, right? Because before the global financial crisis, there was a growing literature that IT and IT-enabled services were driving US growth and productivity much higher. Then the global financial crisis came and all the academics switched to financial crisis literature. But if you look at productivity growth since the 1990s globally, this is what we did, right? And we included this service sophistication measure, which Roderick didn't have. He had manufacturing only. We expanded services and also looked at diversification. I just want to tell you that the results are that what drives productivity growth post-1990 or post-ICT revolution is not pure trade goods to GDP, which I showed you before. It's service export sophistication, like going up the value chain in services, including BPO exports and going into more sophisticated goods. Also, on the good side, it's not how much you export, it's diversification. So if you have a diversified export base or a diversified manufacturing base, you could do better because you're using more capabilities and more skills of different people, and you can have higher productivity growth. On the left side, I'm just showing you that Philippines does well, as I showed you before, on the service sophistication because of the BPO sector, but export diversification is quite weak. So Philippines has a lot this is partly because manufacturing exports have been relatively weak, but the point here is I want to emphasize, rather than saying we need to create a huge manufacturing automobile sector, what I would say is that we need to have a diversified export sector. That would help foster productivity growth. The next pillar of growth, investment. We all know Philippines has a low investment rate. So the question is why? 20% of GDP, still around there, how can we increase it? Philippines stands out as having a very low public investment ratio. It was already mentioned, but which was shown before, to have a higher public investment ratio, you need revenues, right? And higher revenues and higher public investment has generally been associated with better infrastructure quality, right? So we can't have the better infrastructure, which is important for the investment climate, without having the revenues to invest in public investment, but also do the PPPs, right? So what are the other weaknesses in the investment climate? You all know this, so I won't go into detail. And it was mentioned before, infrastructure, we fall behind. These are comparison of the Philippines in the World Economic Forum indicators of how Philippines fares against its ASEAN neighbors and other advanced economies, right? Of course, Philippines falls behind in institutions. Progress has been made, but institutions, infrastructure, goods market efficiency is quite weak. What does that mean? It means competition is weak. Margins and monopolistic rents are high. Okay? So I think that kind of is the next session, so I'll go quickly. We all know FDI has been quite low. I think there are many factors why FDI has been low in the Philippines, including the previous, all the factors we mentioned about the investment climate in general. But obviously, if many sectors are closed to FDI, you can't get FDI in that sector at all. So greater openness to FDI would definitely help, right? And Philippines' degree of restrictions on FDI is one of the highest in the world. It's even higher than South Asia, which is very close to FDI. So the next pillar is human capital, right? Productivity, investment, human capital. Human capital, again, Philippines has a literate workforce, but the quality of education could do better. But the real bottleneck or the area we fall behind is on the health, right? Maternal mortality, infant mortality has been falling. It's been increasing, right? That's an area which is very important, not only from a social aspect, but also for human capital and growth. Last but not least, it's labor. I won't go into details because a few areas which you mentioned. The big challenge to utilize the demographic dividends or harness the demographic dividend would be to increase labor force participation, employment, and not only, otherwise they'll all go abroad, right? So the demographic dividend can be a time bomb, but there are areas we can focus on. If you look at the comparison of the Philippines, in the past, one of the reasons people say things were bad is because, our minimum wages were very high, so we did not have a manufacturing base. That was true, but now other countries' minimum wages are rising, so Philippines is not as disadvantaged. So the issues about flexible labor markets, right? More flexibility so that you don't have rigid situation where you can't fire people, therefore everybody has a 5-month contract instead of having permanent contracts. Those kind of issues need to be addressed with more flexible labor markets, which could help harness the demographic dividend. I know I went like a rocket, but I thought things were covered, and hopefully you found it useful. Thank you.